Hello there! The final part of this lecture series on IAS 36, Impairment of Assets, looks at cash-generating units and reversal of impairment loss. It is not always possible to identify cash flows relating to particular assets. For example, a factory production line is made up of many individual machines, but the revenues are earned by the production line as a whole. Thus, value in use must be calculated and impairment assessment should be done for the group of assets called cash-generating units, CGUs, rather than the individual assets. A CGU is the smallest group of assets that generates independent cash flows. IAS 36 stipulates if an impairment loss arises in respect of a CGU, it shall be allocated to assets within the scope of IAS 36 in the following order. First to assets that are obviously impaired, then to goodwill, finally to other assets in proportion to their carrying value. However, when allocating the impairment loss, please be reminded the carrying amount of the asset cannot be reduced below its recoverable amount, that is, the higher of fair value less cost to sell and value in use. It is important to bear in mind the calculation of impairment losses is based on predictions of what may happen in the future. Thus, it is possible the actual events may turn out to be better than those predicted. Thus, an entity should review at each reporting date to ascertain if there are indications that the impairment has reversed. If there are, the recoverable amount is recalculated and any reversal of the previous write-down is recognized as an income in the profit or loss. However, if the original impairment was charged against the revaluation surplus, the impairment reversal is recognized in other comprehensive income and credited to the revaluation reserve. Note: the reversal should not take the value of the asset above the amount it would be if the original impairment had not been recorded. This would mean the depreciation that would have been charged if the impairment had not been recorded must be taken into account. Finally, impairment loss recognized for goodwill cannot be reversed, as IAS 36 takes the view goodwill increases in the subsequent periods after the impairment loss was recognized will be considered an increase in internal goodwill and not an increase in acquired goodwill. This concludes IAS 36 Impairment of Assets. Here I looked at objective of IAS 36, including assets outside the scope of IAS 36, how to calculate recoverable amount, recognition of impairment loss relating to a cash-generating unit, and finally reversal of impairment loss. In the next lecture series, I will look at IAS 2 Inventories. Till then, thank you and have a pleasant day.